Let's get in the management of Mindtree. Rostov Ravanan, the CFO, is with us right now. Rostov, great having you with us. Let's first get straight to the point that there's a lot of nervousness about the QE taper in the US, but on the flip side of it, the way the economy is recovering, you and other IT majors stand to benefit the most. Let's talk about the game plan on how do you plan to tap into the US growth and the kind of business opportunities that would emerge out of there.
Like you said, the US economy seems to be doing quite well. We are picking up the same message in all our conversations with our customers. Many of them feel a high degree of confidence in their own businesses. So expect that the IT spend for next year by many of our customers to be quite strong. So therefore there are definitely a huge number of opportunities that we are chasing. Hopefully we'll be able to win our fair share of those opportunities.
You know, your performance has been fairly strong. Focus on client mining has yielded strong results. Top client recording average 4% Q-on-Q growth for the last 6 quarters. Deals worth about 400 million signed over the last 3 quarters. Do we assume the same momentum continues forward as well?
This quarter would typically be a little slower because many of our customers would exhaust their budgets. The intervening holidays would obviously also impact a little bit, etc. So this quarter will probably be a little slower, but we expect the momentum to pick again next quarter. Like we announced in the beginning of this year will turn out to be a much better year than FY 2012-13, and from whatever indications we have today, FY 14-15 also seems to be on the back of a very strong momentum.
Mr. Ravanan, hi, this is Bianca joining in as well. Going into FY 14, what kind of outlook would you have on volume growth and also on realizations, both on-site as well as offshore? Do you see a pickup in realizations as well?
The overall business momentum is very strong as we are sort of hearing from customers for next year. So definitely there will be a fairly strong volume momentum. Pricing, our guesses will probably be stable. Don't think or we are not planning for any major sort of price increases in this environment right now, because the market also continues to be fairly competitive. So I'm not expecting any major sort of improvements in the realization.
Okay, in the last couple of quarters, you've seen a decent amount of margin expansion, but now with the rupee around 60, 61, would you expect that there might be some changes to that outlook that you might have on margins for the third quarter and the fourth?
I'll break that question into 2 parts. One is at an operational level and the second is at a PBT level, where the impact of forex gains or losses can play a big swing. The change that you mentioned, that this quarter's probably seen a strengthening rupee environment compared to a depreciating rupee environment in the last 2 quarters, will probably definitely impact at a post-EBITDA, post-operating profit at a PBT level. Probably we will see some lower forex gains or maybe a forex loss in this quarter. However, at an operating profit level, I think we are reasonably confident that we'll be able to maintain margins for the quarter, except for the fact that this quarter will see some amount of impact due to the salary revisions for the last group of our employees which got their salary increases in this quarter. So to summarize, operationally we are fairly confident of maintaining profitability on the back of the growth momentum as well as the internal initiatives to improve profitability. FX related gains or losses are outside our control. We will move in line with the market trends on that front.
Right. Rostov, can you talk about discretionary spending? I believe high-tech is one business at your end which would stand to benefit the most in case discretionary spending picks up. When you talk to clients, what's the sense you're getting? Would 2014 be a good year as far as discretionary spending is concerned?
Definitely see a strong resurgence in discretionary spending, as what the media and the analysts try to call it. Many of our customers or many of the opportunities we are working on right now in terms of proposals, etc., for our customers are very project based, very discretionary kind of opportunities. So that definitely is the same trend we are seeing as well. However, I would try to segregate it between what we are seeing with enterprise customers and what we are seeing with high-tech customers. Probably the picture is not as clear or as rosy on the high-tech vertical side. We're seeing more of a rosier picture on manufacturing, financial services and travel and transportation amongst our existing verticals.
You know, according to experts, there are several operating levers at your end which are yet to be exhausted. For instance, there is potential to improve employee pyramid, that is, employee mix is still slightly unfavorable. Your current utilization is about 600 basis points below recent peak levels of 72%. Offshore mix is about 400 basis points below its peak level of 88%. How do you plan to improve on all these 2-3 parameters?
Good question. So let me take each of those components that you mentioned. Maybe I'll start with the on-site offshore component. We don't have a conscious view to increase or decrease either on-site or offshore. That will depend on the kind of opportunities we win and the best method of execution of those opportunities, keeping in mind our clients' interests. So that I think will evolve over the next few quarters based on the kind of opportunities we win. Employee pyramid is something we are consciously working on. Over the last few years, the proportion of our entry-level recruitment has been much higher than the number of people we recruit from the industry. But I would say that is probably a still 2-3 year journey in front of us for us to get our average cost per person closer to where the current industry leaders are. Every year we will make some progress, but to get the ultimate end result may probably take another year or two. Utilization to some extent is dependent on the amount of recruitment that we do. Since we are adding a large number of campus graduates, that's why our utilization is currently low. We don't mind making that short-term trade-off of running with low utilization in the game plan to correct our fundamental cost structure. So as we are able to ramp up more of the traditional kind of application maintenance kind of services, that will be the fastest way to get our utilization up. But that would also, I guess, would take 1 or 2 more quarters for us to get to our ideal state on that.
Okay. All right, Rostov. Thank you so much for joining us and wish you all the best for 2014.